What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this has been another up week in the stock market. Both the SP 500 and Dow Jones indices have hit fresh new record highs. The excitement around AI and Nvidia beating expectations has only given more momentum to this rally. But as I've said before, we are at unprecedented levels on those indices, and we are bound to come down, so tread carefully. Now, with that said, what I really want to talk about today is Riot Platform. The stock may be down 10.16% this past week alone, but it is still up 133.12% over the past year. They are not only one of the top Bitcoin mining companies, but I also believe that they have the potential to at least double by year end and could potentially 5x by the time Bitcoin peaks in this cycle. So in today's video, I'll go over, in my opinion, what sets Riot apart and ready for such an explosive growth. We'll then take a look at the current analyst recommendations for a stock, and I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So let's start by acknowledging a few important facts. Number one, Bitcoin is currently trading right around $51,000. This is a level we have not seen since 2021, when we were heading towards the all-time high at $68,789, basically 69K, right? Number two, the institutional demand for Bitcoin continues to grow. It has been a month and a half since the Bitcoin spot ETFs have received approval from the SEC. Between then and now, the top 5 ETFs alone have accumulated just over $36 billion worth of Bitcoin. Those are some incredible numbers in such a short amount of time, and they're only going to go up from here. And the third fact to be aware of is that the Bitcoin halving is estimated to take place in mid to late April this year. There is not an exact date because it's essentially programmed to go into effect automatically after 210,000 blocks on the Bitcoin blockchain have been filled with data. Mid to late April is the ballpark, right? Now, what happens with each Bitcoin halving is that the reward Bitcoin mining companies receive is cut in half. Remember that there will only ever be 21 million Bitcoin produced, and 19.7 million are already in circulation. When this halving occurs, the Bitcoin reward will drop from 6.25 Bitcoin currently, right, down to 3.125 Bitcoin. Now, let's tie this back to Riot specifically. It takes a massive amount of computing power and energy to solve this cryptographic equation and earn a single Bitcoin, right? One thing that sets Riot apart from its competition is how efficient they are when it comes to mining Bitcoin. Looking at the earning results Riot posted this past Friday, it cost them $7,539 to mine a single Bitcoin. That's a profit margin of just over 80% given the current price of Bitcoin, right? By comparison, Mara spends around $22,000 to mine one Bitcoin. So Riot has industry-leading efficiency. Another important stat to take note of is their financial position. They have zero long-term debt and are sitting on nearly $1 billion between their cash and Bitcoin holdings. You can see here the massive step change in revenue growth as they started scaling up their operation in preparation for the Bitcoin halving. This is in big part due to the Bitcoin price appreciation that is resulting from increased demand, post-spot ETF approval, and the upcoming reduced supply, or at least difficulty to obtain supply caused by the halving. Now, keep in mind that with their compute power or hash rate doubling in 2024, they should be able to maintain or increase the same production of Bitcoin. And as the price of Bitcoin appreciates, Riot's profit margin should increase proportionally. The bottom line is, while other miners are likely to struggle a bit or a lot of bit due to the reduction in rewards for the same amount of energy or work to earn a Bitcoin, Riot has positioned itself to be one of the biggest beneficiaries, if not the biggest beneficiary, of the upcoming Bitcoin halving. The best part is they are fully self-funded already to purchase more equipment and bring online their new facility. So there should be no need to issue more stocks to raise capital. This ultimately, right, means that their valuation will increase exponentially as the price of Bitcoin rises. Here's another fun fact for you. From the low in December of 2022 at $3.39, Riot is currently up 4x. But there's a lot more upside, and we'll get to that in just a second. But before we get there, looking at the current analyst projections, we have an overall recommendation of a strong buy rating. That recommendation is made up of 5 ratings, 4 buy, 1 hold, and 0 sell rating, which isn't surprising, right? Given the results they've just delivered and their path forward. The high end of the range is expected at $22.50. Meanwhile, the low end comes in at $12 even. The average consensus price target is at $17.90. This implies a 20.54% increase from the current level. Keep in mind that they were just at that level with a year-to-date high so far of $18.24. The stock is currently undergoing a healthy correction from being overbought. RSI is sitting at 53.18, and I'd say that it's fair to expect the price to correct a bit more to the downside to test support at the 50-day moving average, which is currently at $14.07. If that doesn't hold because Bitcoin itself starts correcting lower, which could happen, the next support level would be at the 200-day moving average, currently priced at $12.66. This now brings us to my personal take, right? We've already experienced a golden cross on Riot, which is extremely bullish. Directionally, the momentum favors upside traction versus a reversal to the downside. Inflows into the ETFs will continue to grow as financial advisors continue to educate their clients on the benefit of diversifying with Bitcoin, which, by the way, has been the best performing asset class of this past year and most definitely of this past decade. In my opinion, this pullback is a golden opportunity to start positioning yourself, or in my case, to further add to my portfolio. Looking at the price history of Bitcoin post-halving on this chart, you can see the significant price increase that follows, right? And at no point in history has there been more demand for Bitcoin than there is right now for the same available supply, all while the difficulty to generate a single Bitcoin is increasing. To put things into perspective, we went from $12.22 on the day of the first halving to $657.61 by the second halving. But then Bitcoin shot up to nearly $16,000 to $17,000 mid-cycle before correcting lower. After the third halving in mid-2020, we not only surpassed the 20K mark, but went on to set the current all-time high at 69K, right? And so here's the last thing that I will say and want you to consider as you decide whether or not you should be allocating to Riot. Right before the third halving, Bitcoin saw a solid dip, right? We went down to 5K. And so from that low of $5,000 to the all-time high peak of $69,000, that was about a 13x return on your investment, which is mind-blowing, right? But here's the thing. When we look at Riot by comparison, Riot went from a low of $1.27 to a peak of $79.50. That's about 62 times a return on your investment. If you had invested $10,000 at the time into Riot, that would have been worth over $500,000 by the time we reached the peak, which is absolutely ridiculous, right? In the most positive way. And so this time around, Bitcoin's low was right around $15,000, right? If we apply a slightly more conservative multiple of 10x on Bitcoin, that could take us to $150,000 per coin post fourth halving once we get to the peak. And for Riot, if that scenario plays out, keep in mind what that would do for the company's valuation based on the Bitcoin held on the balance sheet. But let's be super conservative, right? And say that we'll only return to the previous all-time high. In that scenario, that's an easy 5x from the current level. That said, Riot's price appreciation has historically been exponential in relation to Bitcoin itself. So a 10x or greater ROI isn't out of the realm of possibilities here. When you couple that with financial conditions that are set to loosen in the second half of this year, you can see why I'm stacking as much Riot as I can while I can. And hopefully this has given you some food for thought. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.